Good morning, everyone. It is March 22nd, Wednesday. This marks the probably most historic FOMC event that we will see over the next, well, that's since the past year and that we might see in the next year, right? This could be a very, very pivotal moment. Within the past year, this is going to be the most historic FOMC event, realistically, that we're going to be witnessing here because there is a lot to look at, and Jerome Powell has to make a very, very big decision on how this is going to go. This could mark the lows of this whole downside move. This could mark some kind of panic. It could mark a lot of different things. And it's going to be very pivotal for everyone to watch, meaning that a lot of traders and investors are going to be very inactive leading up into this event that comes out today at 2 p.m. Eastern time that we're going to be trading live in our trading room. So if you want to do that and join us, you know where to go. So today's FOMC, right, we have priced in a 25 basis point hike that is about 88% priced in, meaning 12% for a stand in the current rates. But there's also the factor that we might see, right, the 50 basis point hike. A lot of traders were expecting that until recently because the economy appeared to be surprisingly robust. But we've seen that three banks in the US failed: Silvergate, SIVB, and SBNY, and a fourth that's teetering, which is going to be FRC. We've also seen that Credit Suisse took a battering, and UBC or UBS came in and stepped in with the Swiss authorities to take that over. Now, may the Fed policymakers may be rethinking their expectations for the rate hike today, but there's still a chance, naturally, a lot of uncertainty, but there's still a chance that we have four potential outcomes that a lot of people have been talking about. So, as a reminder, the Fed has increased its key rate for the eighth straight meeting, bringing the federal funds rate between 4.5 to 4.75% from 0 to 0.25% in the past year. And this has been driving down inflation. There's actually a Twitter page, I believe, called Trueflation, which marks the real inflation figure down to 4%. So I don't know how accurate anything is anymore. But meanwhile, the core PCE price index, the central bank's preferred inflation gauge, jumped had a 4.7% jump year over year in February, up from 4.6% in January, but easing from 5.2% in March 2022. So don't forget the efforts to shrink the bank's balance sheet that were upended last week as a financial institution borrowed a whopping $153 billion from the Federal Reserve and $12 billion from the newly created Bank Team Funding Program. Though assets from emergency lending tend to fall as soon as crisis subsides compared to holdings added under quantitative easing. With regards to whether to hike or not, the decision won't necessarily be easy. Naturally, inflation still remains fairly high, so we think at least. And a pause now could signal deeper problems as to cycle inflation more so, and also within the banking system. On the other hand, there are fears that the Fed is moving too far, too fast, and with its aggressive rate increases, some of the current banking crises as a direct result of tighter monetary policy that we've seen. So ultimately, things would boil down to whether the financial stability problem has been limited to a handful of regional banks, or as expected or as seen in Bloomberg, about 200 banks are facing such problem. So if this is successfully contained, um, then naturally we're going to see some pretty clear skies ahead, in my opinion. But if it's something that's systematically broken on that side, there's going to be a larger downside move, and that's going to be where Jerome Powell will lead this market today, right? Is it going to be more of a sustained thing, or is it going to be more in crisis mode? So, as I was saying, I think there's actually four probabilities and four paths that could be taken here with the FOMC. Number one, we have the highest percent probability is going to be a single quarter hike, right? Quarter of a percentage point hike, 25 bips. That's the highest probability. Then we have the probability that rates stay the same. We also should include a probability that they actually hike 50 basis points. Now, that's not priced in at all, but that is a possibility. And another possibility is if they cut 25 bips, which, yes, okay, that brings in um, more of a lax and easing monetary policy, if you will, where it begets that, it also starts the Fed pivot, and it also brings panic to the economy because they think that this whole crisis might be a little deeper rooted than actually it seems on the surface. So we have those four probabilities. I still think they only hike 25 bips. I think there is a bullish reaction based on that before we start seeing some of that kind of follow through back to the downside in the coming days and weeks. But I think the bullish moves comes out of that because we can still see that the economy is fairly strong if they can hike that 25 bips, and this banking crisis is not something necessarily to worry about. And that's the perspective that I see from this. So we'll see how that shapes up. We had Nike earnings and a bunch of other stuff that's not that um, prevalent in today's market, or in today actually, because we have the FOMC naturally. We're going to be watching the FOMC very, very closely and keeping a very close eye on that. Now, in terms of levels and trades, I'm not going to be doing anything this morning. I want to see how this FOMC shapes up. I have longs on Apple, SPX, and that's about it. Also, some oil names like XOM and Oxy. We picked that bottom really, really nice with our room. So we'll see how those things shape up. Looking for some longs. I'm looking for a potential short in some tech names, right? When this thing kind of boils over and we get a little more understanding of what the FOMC wants to do. But right now, I'm leaning a little more bullish in this market, and we'll see how that shapes up. So if you want to trade the FOMC with us, just check us out at tradeproacademy.com. You can use the code VIC20 for the first month, 20% off in our futures trading room, and I'll see you guys in there. So thank you for watching. Shorter update today. We'll see what happens with the FOMC and tomorrow. We're going to have naturally a morning update to kind of give you guys a base understanding of what happened, what's going on, and where we could lead with this. So that's what I'm looking at today, and I hope everyone has a great trading day, and we'll see you all tomorrow.